Hey guys, in this video, I'm going to talk to you a bit about what made me a profitable trader, and it's not necessarily what you think it is. And I guarantee what I share with you in this video will help you either become profitable if you're not already, or it will help you optimize your trading system. Now, I've flipped multiple accounts as a trader. I've managed multiple six figures as well, and I've learned a thing or two along the way. But before we dive into all that, what I want you to understand is that the market is random, but trading is not random. And trading really can be compared to sailing, right? So the sea is the market. And the sea is unpredictable, but we have variables that we can control as a sailor when we're sailing the sea. And those variables that we control, that's our strategy, that's our edge in the market. It's very comparable, but the reason that the human brain doesn't necessarily like this is because the human brain looks for certainty. Now, if you're looking for certainty in an uncertain environment, you're just going to get frustrated because you're not going to find it. Mark Douglas famously talks about the fact that technical analysis will not give you certainty. It will just stack odds in your favor. You have to think of trading as a science experiment. So every single trade that you take is just a small experiment as part of a larger experiment. And a single trade is random. The result of any one trade is essentially a coin flip or random, regardless of how good the setup looks. But the law of large numbers comes into play here. And an edge only becomes apparent over a large number of trades. The aggregate results will reflect the probable outcome of your strategy. Tom Hogarth talks about it in The Best Loser Wins, where he talks about one trade, the outcome is completely uncertain, but you have a more probable outcome over 100 trades. That's literally what trading is. And if you can understand that trading is just a science experiment, it's a data collection process, but it's an experiment. It's not about making 7 figures in a year and flipping a small account to crazy money the first time you start trading. It's about building data, understanding your edge. Once you understand your edge, you built your data, then you can start to do those things. That's when the benefits come from trading. The big paydays, the flipping money, the prop firm payouts, whatever you're going for as a trader. Now, I want to talk to you about a couple of trades that I've taken this week. Now, USD CHF, I took a very basic area of supply as a sell, and it came in for a 1-to-1. I've actually got that trade down here, which made about $2,000 profit. And then I actually traded a couple of others this week. But then if we look at another trade I took one today, which made a loss. And that was an area of demand. If you don't understand supply and demand, watch my first video. I give you my strategy essentially in that video. But all I'm looking for when I'm looking for a trade is 1-to-1 risk reward. Now, I talk a lot about that as well in other videos, but 1-to-1 risk reward psychologically fits my personality very well. And also pursuing some prop firm challenges and evaluations at the moment, the higher win rate suits that much better. This trade here on USD CHF very simply was just a strong area of supply. We pushed in, we reacted, I made 15 pips. This area here was a strong area of demand. We pushed in, we didn't react. I didn't make anything, I lost 15 pips. Now on those two trades, the reason that I took them is because I had cross-asset alignment. Why did I have to take those two trades? Well, I had to take them because they have an 82% chance of winning. 82.6 currently across the last 23 trades. So last 23 trades, I've got an 82.6% chance of winning. And I have this collected on thousands of trades. I've only recently moved to Notion, but all my other trades are being collected in Excel and Google Sheets. And I know that my win rate very rarely drops below 75%. Now, does that mean that every trade is going to win? No, of course it doesn't. But it does tell me a probable outcome over a large sample size, over enough trades. So when this setup presented itself today, I had to take it because it had an 82% chance of winning. Just because it didn't win, that means absolutely nothing. It's completely irrelevant. Now, if you don't have an edge yet, I would encourage you to explore mine, use basic supply and demand. All I would suggest is that you need a 50-50 win rate, so 50% win rate at 1-to-1R. If you have that and you can fill out a table like this, where you're looking at some of the parameters, the optimal miss potential, the drawdown in pips, optimizing all that, then you'll be able to make that system profitable. You only need 50-50 at 1-to-1 to get profitable here. Now, once you understand that this is just a science experiment, it's just a case of collecting data. That is how you get profitable. And it doesn't necessarily sell on social media. It's not very easy to sell my services as a mentor by posting how we collect spreadsheets of data or how we optimize our strategy using data. That's why you see so much content online of Lamborghinis, Rolexes, because that's what sells. But the reality is that's not trading. Something I want to suggest for you guys is if you are struggling with stupid mistakes in the market, I would suggest getting an accountability buddy. Use a friend that trades. I do it as a mentor. I do it with my 1-to-1 students. You can see here an equity curve from one of my students. Very sporadic, all over the place. We started working together here and we've seen much more consistency. big drawdown here, excessive over leveraging through periods, all that, then it's become much more steady. That's because we have bi-weekly calls. And on those bi-weekly calls, when I sit with a student, it's very difficult for them to sit on the call every week and say, I messed up again, I over leveraged again. They know that call's coming, so that accountability makes them better traders. Something you can do with a buddy or with a friend is give them your investor password, review each other's account weekly or fortnightly, or use an external software for them to monitor your account. And by doing that, then you're keeping yourself accountable, but they're also keeping you accountable as well. Now, if you don't have that, the other option is to do what I do, which is I have a psychology review. I write down my plan deviations. How did I deviate from my plan? What was my thought process? How do I rectify it moving forward? For example, how did I deviate from my plan? Well, an example of this might be, I put in here, I deviated because I entered a trade, it hit stop loss, and then I entered a revenge trade 10 minutes later. What was my thought process at the time? I thought I was going to make back the money I lost on the first trade. The result is irrelevant. What I'm looking at here is what happened psychologically for me. How is this rectified moving forward? Well, to rectify something like that moving forward, I need to look at some deeper things within myself. Why do I think that revenge trading is going to make the money back? My system's based on data. I don't have data on revenge trading. If I do, so be it, I could trade it, but I don't have any data on revenge trading, taking a trade straight after my last one. In fact, if I was to build data on that, I guarantee you guys will be the same, you'll probably have a negative expectancy. So understanding that is really, really important. But just overall, people perform better under observation. So the process around this principle is that you will be a better trader if you're being observed. If you're doing stupid shit every single week and you have to explain that to someone or somebody's watching, you're going to feel embarrassed. It's embarrassing that you keep making mistakes, that you have so little self-control that you're not able to execute a basic system in the market. And that is the reality for a lot of traders. They're actually unable to because of their psychology. So that's tip number one, get observed. But tip number two is a massive one, and this is social media. Get off social media. You don't have to get off it completely if you use it for your job or whatever, but stop watching brain rot yap videos or lifestyle content. It's not benefiting you as a trader. You have to be super intentional with every action that you make. Every thought that you have as a trader has to be intentional. Because this isn't just a job that we turn up for 30 minutes a day. This is something that we have to live and breathe. We have to protect our mind at all costs. If you're chasing dopamine, you're not going to succeed as a trader. The reason being, because if you're chasing dopamine, picking up your phone 100 times a day, scrolling through brain rot, you're looking for that dopamine fix. It's going to translate into being a bad trader, because when you pick up your phone and you enter a trade, or when you enter a trade off your laptop or your PC, you're also going to be searching for dopamine. You're a dopamine junkie looking for their fix all the time. You don't want to be in that mindset. You want to be completely numb when you trade. You know what personality makes the best traders? Well, in my experience, it's people that are more grounded. They're lower pace. They're verging on numb. They don't get excited. They don't get angry. None of that. They're just level all the time. Now, I'll be really honest with you guys. I struggle to get excited about anything. And that's really not a flex in any way. It's horrible. It's actually necessary for me to perform on the level I do in the markets. And to become profitable, I actually had to go to a really, really dark place in 2019. Really dark. And I'm not saying this is necessary for everyone, because I've seen tons of mentees become profitable in very short periods of time, very successfully, in a good frame of mind. But I literally had to get so fucking sick of my own shit that I just couldn't bear to do it anymore. And I hit rock bottom. I stopped feeling anything, any emotion at all. And I'm just being real with you guys. I don't have any care around a trade working or not working. I took a loss on a trade today. I don't care. It's one trade. I could not care less. And I'm just being honest, because I can't feel anything from it anymore. I've felt all the feelings that there are to feel in the markets over the years, that it's made me completely numb. And that's what it took for me to become profitable. Now, that is a really dark side of trading, but it was actually necessary for me. And I'm not saying it's necessary for everybody, but you have to remove that feeling of excitement or fear or any feeling around any trade outcome, because it is irrelevant. Because trading is a job, right? And brain rot, dopamine hits, they will destroy your trading. It's the same reason why a gambler makes a bad trader. It's because they're looking for excitement in the markets. You're not going to get anywhere if you're looking for a feeling from a trade. You need to be executing a probable system over a large sample size. Real trading is actually boring. You're not going to get excitement from the markets. You don't act on impulse. You just want to act on your data, what your plan is telling you, what your strategy says you have to do every single day. So just to be clear, you need to be deliberate in your thinking, right? You can't be searching for dopamine. You have to have you have to have clarity in your mind at all times. You want to execute robotically. You want to track all the metrics, and you want to refine your edge. But in today's world, So many people are failing in trading because that is so difficult for people to do. They're constantly distracted by stuff around them. Their thoughts aren't clear. They're constantly looking for dopamine. And all this leads me on to a routine. You can't be waking up late. You can't be missing your session, not sticking to the journaling process. This is a really tough environment to make money in, and it's really tough to operate in, keeping your mind pure. And it's much like an athlete. We need to live it. We need to breathe it. If you look at some of the stories about Kobe Bryant, how he used to show up for practice 2 hours early in high school, or he'd play games one-on-one to 100 points with his other teammates. He'd stay and shoot 100 free throws after practice because he missed one in a game. He was literally doing more work than an NBA superstar. Unfortunately, social media has probably led you to believe that you can trade on a beach in Thailand, you can sip cocktails and look at a chart for 30 minutes a day at New York Open and do no other work. Sure, you can trade only the New York Open and do no other work, but the other work around that has to be journaling. It has to be preparing your mind. It has to be getting enough rest. It has to be making sure that your thoughts are clear when you're in the market, that you can make quick decisions. It has to be understanding your trade plan, optimizing it through your data. All this stuff is very similar, and it's like an athlete that has to do sports therapy. They have to eat right. They have to sleep well. Yeah, they have to perform on game day, which is just one day of the week or a couple of hours at the weekend or whatever. But all the things that lead up to that performance are more essential than the actual performance itself. Now, I'm just using Notion at the moment, and I'm going to show you guys how I've been optimizing some of my data. But when I get to the end of the year, I'm going to do a very thorough review on my data. I've got thousands of trades logged in Google Docs and Excel and so on, but this is just in Notion. Now, in Notion here, I only trade with cross-asset alignment. If you don't know what cross-asset alignment is, I have a free PDF under this video. Just add your email and you'll get that free PDF to show you how I use that. But if I filter out this column to only have trades showing alignment, then I know currently, just since the start of September, that I'm operating at an 82.6% win rate. Now, if I take every trade without cross-asset alignment, so I show both, look what happens to my win rate here. It drops to 70%. Still a good system, profitable, I'll make money there. But the issue is, that's taking a lot of my win rate down. So if I now filter that back to just trades without alignment, I can see that now I have a 37.5% win rate. What's that telling me? Well, that's building my strategy. It's telling me that I need cross-asset alignment to take my supply and demand levels. Right? Really simple. Now, if I keep that on, I'll show you how I can play around with some of the other metrics here. If I look at the average true range, now if we push outside the average true range, if you don't understand what that is, I'll show you quickly on a chart. Every chart has an ATR, and ATR is simply this line at the bottom here. If I hover over the current daily candle, you'll see that the current ATR of this pair is 51 pips per day. So that means on average, this pair moves 51 pips per day. So if we have a big push from the open of 60 pips, for example, so the open candle was here. So if the market pushed to here on the day, then that pair has now moved to the ATR of the day, the average true range, equally to the upside. If it exceeds that, then it's outside the average of a normal move for this pair. So I know that that's likely to retrace, or maybe it is more likely based on my data. Let's have a look. So if the market has pushed outside of ATR, and I filter this column, am I more profitable? Okay, I've got a 75% win rate outside ATR with alignment, right? What about if I just trade inside? Got an 86% win rate inside. What does that tell me about my edge? That tells me that my edge performs best on less volatile days. So I'm better at trading ranges than I am when the market starts to trend. So if I'm trading small tight ranges on a pair, let's look at gold at the moment. It's a great example. We've had loads of setups on this lately, but gold has been ranging here. Now I trade supply and demand. Well, there's a supply zone here. And I'll show you a couple more. There's like demand zone here. Now I know that this market's ranging. That supply zone ended up being over here at one point this week. We traded that actually for a sell. This demand zone ended up shifting up. Again, if you're not fully grasping supply and demand, then watch my first video. You'll figure it out there. Very basic concept, but price pushed back into that demand zone. This is a ranging market, and in this ranging market, I definitely perform better. I've seen that in my data over time. So I know that if I trade with cross-asset alignment inside a range, I'm going to be my most profitable as a trader. Lots of traders like trending markets. The markets range more often than they trend. I like ranging markets, so that fits really well with my strategy, with my edge. But what else can I do with that data? Well, I can also look at stuff like my missed potential, my drawdown in pips. when I took these trades, for example, this one here, or USD even today, why did I have a stop loss here of 15 pips? It's because of my data. My data tells me that that is optimal stop loss. Now, at the moment, my current drawdown in pips here is 5.53 pips. I'm using a 15 pip stop. Is that really necessary? Do I need a 15 pip stop on every trade? Currently, according to my data, not necessarily. I could probably get away with a tighter stop loss. Could I then have a tighter stop loss but have more higher risk reward on the trade? Possibly, because my missed potential on these trades at the moment, if I take the ATR filter off, because I am trading both, these are the trades that fit my plan exactly, I got a 1.26 R of missed potential. So that means if I'm taking 1 R per trade, there's 1.26 on the table. I got 15.94 R here on those 23 trades collectively, or however many there have been. Sorry, it's not 20, yeah, 23. So 15.94 R. Could I push that much more by increasing my average risk reward or decreasing my stop loss? One of the two. Absolutely, I could. I need more data, and I'll keep collecting till the end of the year. Once I get 100, 150 trades, great. 500 trades, even better. 1,000 trades, even better. You know, the more data you have, the larger the sample size, the more conclusive this is all going to be. But my stop loss placement at the moment is based on my previous data. So people always ask me, where should I put my stop loss? It's fixed. My stop loss currently is not a variable thing. I don't look at the level. For example, this level here on USD so it's a 4-hour level. I don't look at this level and go, right, stop needs to be below the level, below the zone here. It's all fixed because it's fixed on what my data has told me is my optimal stop loss on this pair. And all of that is built around ATR. So, you know, I've built this indicator here, and that will tell me currently it's at 20%. So I've been experimenting with some different parameters to see for my data. But currently that's a 20% stop loss, 20% take profit of the average daily move. Now, I told you guys the average daily move is 50 pips at the moment. So that's just 10 pips. Very simple. If I look at another asset, let's look at euro dollar, then 20% of ATR for stop loss take profit is 12 pips. Maybe it needs 25% based on my data. Maybe I can get 1 to 2 out of these trades. All I need to do is change the code under this for my indicator, and it will tell me exactly where my stop loss and take profit needs to be. You don't need to use an indicator. You don't need to use code for that. You can simply just make a note of what your stop and take profit needs to be. I've just built an indicator that tells me on the chart, so I have to think less. And the key with trading is that we don't want to be thinking. We don't want to feel, and we don't want to think. When I took this trade earlier, I didn't think it's going to work or it's not going to work. I didn't think anything. I just took the trade. You know, it's totally irrelevant whether it's going to work or not. The level, Pip perfectly reacted. That reinforces to me that there was a level there. That reinforces also that I would take that trade every single day of the week without fail. And, you know, had I used 20% ATR, like I just showed you there with a 10 pip stop, 10 pip take profit, then it would have worked. You know, that's an interesting piece of data. Maybe in the next quarter, I need to be using 20% of ATR for take profit and stop loss. It's all really simple, guys. This stuff is just basic trading. But for some reason, people just neglect this because of social media. I firmly believe that social media leads people to believe trading is something it's not. And they end up then down this rabbit hole where they're doing crazy things that don't make any sense. The key is collecting your data, detaching from the outcome of every single trade, and executing robotically. Don't think, eliminate the thought process by putting together a really comprehensive plan. Read that plan every single morning before you show up to the markets. Review mistakes you're making. Get yourself an accountability buddy, a friend, a coach, whatever, who is going to look at your trading performance and assess it at least every other week, if not every week, and execute. Just show up and execute. That's it. Avoid that brain rot social media content as well, guys. It's not helping you as a trader. Sure, I get people love social media for various things, but just be aware you have to be intentional in your thoughts. Every thought that you have has to be pure, and it has to be guided, and it has to be directed towards being a profitable trader, which is not too dissimilar to being a professional athlete.